Hi there traders, this is Chris from Elite Currency and we're restarting our videos on Bitcoin and an extra cryptocurrency that we take a look at 3 times a week, Tuesday, Thursday, and the weekend. Let's take a look at Bitcoin and see what we could expect from a technical analysis point of view. Alright, so this video is going to focus on charts, patterns, price patterns basically in general, and not on fundamentals. We're looking at Bitcoin versus the dollar on the daily chart. And we see that the price is going sideways, which is indicating a consolidation zone and is indicating, in my view, a correction after a pretty strong bullish momentum. Bitcoin is different than the other cryptocurrencies because it did show a momentum, a bullish impulse here that it was able to escape the 21 EMA. So we have what I think is looking like a wave 1 that went into the 21 EMA, a wave 2 that failed to break this bottom, and then we see a strong push away from the above and away from the 21 EMA, which is indicating, I think, a potential wave 3. This correction is looking like a wave 4. Once this correction is finished, we expect a wave 5 at these Fibonacci targets. So the wave 4 itself, let's put a fib, as I already have, from the bottom of wave 3 to the top of wave 3, potential wave 3. And typically for wave 4 is a choppy, long consolidation zone. So that's what's happening right now at this point. We have 5 days going sideways at this moment. Price typically stops at the 23.6 fib. It already did that, but it could retrace easily to the 38 or 50 fib as well. Those are very normal and typical Fibonacci levels for a wave 4. If it breaks below the 50, specifically maybe the 50 and 61.8 fib, then a wave 4 is becoming less likely. And in that case, this is probably an ABC correction rather than a 1, 2, 3 wave pattern. The real invalidation level of the wave 1, 2, 3, 4, 5 is if price were to go into the territory of wave 1, then this is not a wave 4 anymore. So if it breaks basically below the top at 67.90, then it's not a wave 4 anymore, right? 67, yeah, 91-ish. A bounce at 72.46, 75.31, those would be typical for wave 4, shallow fib retracement and bounce. So what we're expecting here is some kind of triangle or a bull flag chart pattern. And once price breaks above that pattern, the resistance of that pattern, chart pattern, then we expect price to find its legs up to the minus 272 target at 91.06 and then the minus 61.8 target at 99.40. Which is where I think around that psychological round level of 10K, where a bigger wave A, a 5 wave within wave A could finish. At that point, we expect 3 wave down, A, B, C, within a wave B, that's the bearish variant, and then a wave C up. Alternatively, and this is I think actually more likely, is that it's a wave 1 actually, here, A, B, C within wave 2, and up it goes for wave 3. All right, but that still remains to be seen. Let's take a look at that weekly chart, and let's get rid of this fib. So we are right at the 21 EMA of the weekly chart. So if price pushes above it, then goes back into it, and then starts to break above it, I think that there's a good chance that this could be a wave 3, and that wave 3 could re-challenge the resistance zone up here and even re-challenge the previous highs potentially. All right. But that's a bit further down the road. Let's see if that really happens. If we don't get a higher high, then it looks like an ABC, and in that case, price could start correcting lower again. If it breaks below this support trend line, right? Then in that case, we might see more correction to the downside. In that case, we might see an extension of this falling wedge, and price could fall maybe towards the 5K level, for instance, right? So if it breaks below this, 6,800, there could be more bearish pressure to retest this bottom first of all, and then fall maybe to the long-term moving average and the psychological round levels at around 5K. We can look at potential support on the left here and here. Those are levels, of course, to be aware of as well. So that's the main thing at the moment for, I think, for Bitcoin. Will it confirm the retrace and bounce for wave 1/A, or is it going to break below it and make a bigger bearish correction? The 21 EMA right in here is going to be a key level, because if price bounces there, that wave 5 does seem likely. And also we have a supply demand zone here, so that could aid and give extra support for a bounce as well. All right, let's take a look at Ethereum. Ethereum is looking different. Now look at, let me put the different template on. Look at the 21 EMAs right here. Price was not able to escape from it. So this is looking more like an ABC correction. Price is staying in the 21 EMAs and now trying to break below it. So it looks like price made some kind of flag, a bear flag pattern actually. And if it breaks that bear flag pattern, which could happen today, if today's daily candle is bearish and closes below the 21 EMA, closes below these fractals, you see the fractals are indicating red diamonds, indicating downtrend. So Ethereum and other cryptos are looking, pretty much different than Bitcoin at this moment, right? You see momentum prior to it, you see a flag, so we could get a lower low and we could get a challenge of that bottom. Now, price already bounced at the 88.6 fib. So there's not really anything left of support if it does break here. All right, maybe double bottom. All right, that could be something. Maybe two double bottoms, one at the 88, one at the 100. That's around 356 and 410. But if it breaks those levels, we're going to look for, there's a chance that we might get a lower low on Ethereum. And that has been a while because the last lower low here, the big low at least, is dating already from April, beginning April. Now, if we get a bounce at the double bottoms, there could be finally that rally. And I was thinking that a rally seems more likely because we see 5-wave momentum here. And this is looking like a correction and expected a bounce. We did get a bounce finally we got bounces at the 38, 61, 78, and 88.6 fibs. But we didn't get a D-bounce. We didn't get a stronger bounce. And for that to happen, price really needs to break again above the 21 EMA. But probably more importantly, price will have to break above the long-term moving average and the channel. All right, so a re-break above it could see some upside. But eventually we will need to break above, the Ethereum will have to break above the second resistance zone before we can see really a kind of a sustainable, mature trend. That's the word I'm looking for. Otherwise, really, we don't know if this is still just part of the correction or if it's finally making some good upside and not just some sideways correction and sideways flag. All right, looking at the weekly chart, you can see that the weekly 21 EMA is bearish. So here too, a break above the 21 EMA is needed. We already had a break here. That was the first break. The second breaks above or breakouts above the 21 EMA are always better. That's what we're waiting for on the weekly chart, is a break above the top of the 21 EMA, which is around 590, 600 as you can see. So let's go back to this time frame here. There we go, and you can see that that is about the same level as, or just a bit above actually, the long-term moving average. So that's the zone we're looking for. Here's a bullish zone, here's a bullish zone, and then we have bigger momentum to the upside. But for the moment, we'll have to see how price breaks this flag and how price approaches these bottoms, because for the moment the bears are in control and it could push lower towards these bottoms and potentially a newer lower low. All right, we'll be back in 2 days taking a look again at Bitcoin and perhaps a different cryptocurrency at that point. Wish you all good trading. More free analysis you can find at elitecurrency.com. Cheers.